On Friday, the Dow Jones Industrials closed at 16,459, which is 10.1% off its all-time high set about 3 months ago, and continued its decline on Monday. Somewhat nerve-wracking for some investors is that about half of the 10% decline occurred in just 2 back-to-back days on Thursday and Friday last week. This market decline is characterized as a correction, which is simply defined as a 10% or more decline from all-time highs. And just for reference, the most widely accepted definition of a bear market is when prices fall 20% or more. Investors, of course, want to know why stock prices have fallen. There is no certain explanation. What is certain is that stock prices declining is perfectly normal. Stock prices have and always will go both up and down. You must endure these ups and downs to reap the long-term value stocks have historically generated. Market volatility and stocks dipping into correction territory serves as a great time to remember some important long-term investment considerations. A correction is a great gut check for many investors. If you're a little uncomfortable and a little anxious about the losses, that's perfectly normal. But if you can't stop worrying about these losses and what possibly may happen next, you may have too much of your portfolio in stocks. Every investor needs to have the right portfolio allocation and risk profile. We're glad to help you get this right. A second point is that diversification is your friend. The goal of diversification is to reduce risk by having multiple investments that do not always go up and down together. This is working for our super diversified client portfolios. Even though stock prices have declined more than 10%, our clients' portfolios generally have experienced losses of no more than 7% for more aggressive growth-oriented portfolios and as little as 1% for conservative income-oriented portfolios. If you're not adequately diversified, let us help. One last point I encourage you to remember during market corrections is that nobody knows with certainty where stock prices go from here. You're going to hear all kinds of predictions and forecasts made by very intelligent and informed experts, but remember that none of them have a crystal ball. The bottom line is that market corrections are simply no fun, but the reality is that they are normal and to be expected. I believe stocks will continue to create tremendous long-term wealth for investors, but we all need to be prepared for the possibility that prices decline further in the short term. Nobody knows for sure. Rest assured, though, that portfolio diversification is working. You need to make sure your portfolio is diversified, and diversified in such a way that delivers a risk profile that's appropriate for you. This is a key to long-term investment success. If you're unsure about your portfolio, let us help you figure it out. We're here to help in any way we can. Please let me know if you'd like to talk, or we can do anything to be of service. Thanks a lot.